Now that Donald Trump has returned to the White House as the 47th US president, he wasted no time in fulfilling his campaign promises. Among the hundreds of executive orders that he signed in the past week, one was to allow the drilling on federal land. He followed this up by urging OPEC to lower oil prices. As a result, oil prices fell from last week's high of $80.77 per barrel to as low as $74.01 before settling at $74.60 per barrel by the end of the week. While Trump's action may suggest that oil prices are heading lower, in which they had this week, but the technical outlook does suggest something otherwise. I have reason to believe that we may be in the early stages of a sustainable rally way above $100 per barrel over the medium to long term. Let me explain. Now, in this chart here, this is the weekly time frame chart for the Brent continuous crude oil futures traded on ICE. I just want to give you the contrast between the WTI, which is the West Texas Intermediate crude oil, and the Brent. Both these two are the benchmarks for crude oil, and I want to show you the relationship as to how similar they look. Now, in this Brent crude oil using the continuous oil price chart based on the futures, we can see that the settlement price was $77.47, 49 cents as of the end of Friday's trading. And the pattern here is that the oil prices has actually stable at just under $16 way back in May of 2021, and it has risen to as high as $139.13 per barrel at the beginning of the war in Ukraine, between Russia and Ukraine. And since then, the prices has actually climbed back down and has been settling above $70 per barrel for a long time. And prices has recently been perking up. Recent high as of the week before this is at $82.03. Sorry, $82.63. So this is actually what we've been seeing, and I have believed I'm do suggest that the price pattern here does suggest that over the long to medium term, price may be finding a bottom, and it looks like it is doing what we call a rounding bottom, and the prospect is for the continuation of the long-term bullish outlook in crude oil prices, with the potential to rise to as high as $187.87 over the long term as far as the Brent is concerned. Now, having shown you the Brent, I want to show you the WTI. Same thing, this is the weekly time frame for the West Texas Intermediate crude oil using the continuous price chart. The current active month is the March contract, March 2025. And we can see the market settles at $74.60 by the end of Friday's trading on NYMEX. And we can see the price pattern is very, very similar, and the market has been finding a bottom at about $63.64, and over the last couple of weeks you can see there's a perk up in prices, and over the long to medium term I have reason to believe that this is part of a continuation pattern, with the prospect of the WTI crude oil futures going as high as $190.36 per barrel, and of course the timing of which I do not know, but it does look like over the long term, this could be something that we have to be watching out, and it is a good price to be buying in the current pullback. Now, I want to show you next is the daily time frame. What you're seeing here is a daily time frame as of the same chart based on the March WTI crude oil futures. We can see that the market has did a three-wave rally. Equality has actually been hit at $80.78 the week before this, and the week of Trump's inauguration, we saw the crude oil prices has pulled back, and largely because we all know by now Trump's outlook on fossil fuel. He has actually abandoned Biden's Green New Plan, and he is ramping up the exploration and production of crude oil. So this should actually add supplies into the marketplace, and market has been coming off the whole entire week. And of course, we all knew what happened on Friday, in which he actually urged OPEC to also lower prices. So this also caused prices to close on the weak note. By the time the market closes at $74.60 per barrel. So I do think that if the market continues to pull back in the early part of this coming week prices, there is possibly a bottom at about $72.71 basis the March contract. So by and large, I do believe this is a lower to buy kind of proposition, and I am actually quite bullish on the price of crude oil going forward. In the medium term, if the market managed to trade and close above $80.78, which is the previous week high, then the market has the prospect of actually challenging the $87.70 per barrel to as high as $78.30. So this is the medium-term outlook for crude oil. So technically, I am pretty bullish on the possibility of a resumption of the long-term bullish outlook in energy prices. And of course, we all knew what happened in Europe. The war in Europe between Russia and Ukraine does not appear to be coming to an end anytime soon. And this could lead to an escalation for all we know. And this could be the catalyst that will cause price to once again rally back above $100 per barrel. So this is my take, and I wish you guys all the best. And for those Chinese celebrating Chinese New Year, I'm here wishing you guys a happy New Year. Bye-bye.